following is a paid advertisement program provided by Premier Investments and Wealth Management. An airing of the program is not to be considered an endorsement or recommendation. The views and opinions expressed are those of the hosts, guests and callers and not necessarily of this station or iHeartMedia. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. The information in the following program should not be construed as an offer to sell and is not intended to replace the advice of a qualified tax advisor or legal counsel.
Hello there and welcome back to another edition of Premier Investments in Wealth Management. My name is Doug Wagner. I'm your host for this program. I would like for you to go to premieriwm.com right now. If you're listening on the radio, great. That's fabulous because that means your phone is freed up for you to just sit there and go over there real quick. If you are listening on your phone through the iHeartRadio app, you can still use your phone, open up that browser, whether it's there on a tablet, desktop, laptop, premieriwm.com. Click on Get Started, answer a few questions for them at Premier Investments, and they will provide for you what's called a Premier Vision document. It's a one-page synopsis of what you can expect when you work with Premier Investments in Wealth Management. Now, they will reach out to you for a no-obligation consultation, and it can be really quick for you. But I think it's something when you take a look at this Premier Vision document, you're going to be intrigued by it because if you don't know if you're ready for retirement yet, it doesn't matter if you're 35 or 55, this is going to be the kind of document that can help you get a handle on it. Let the professionals at Premier Investments in Wealth Management, premieriwm.com, help you out and navigate those tricky waters. premieriwm.com or call 800-383-6590. Now, with no further ado, let me introduce the new sheriff in town. It's Elias Randall, Vice President and Wealth Advisor at Premier Investments in Wealth Management. Hello, Elias. How are you?
Doug, I'm great. How are you?
Good. I'm very thankful that the election's almost here and done. I mean, we're going to be talking.
I cannot wait till we're beyond the election. You know, in our business, we get asked, we almost don't get a break from it because by the time the new president's in office or the same president's still in office, people are asking about the next one.
Right. Exactly. Talk radio, same way. Roger Abel is an accredited investment fiduciary with over 21 years of experience in the financial services industry. He's the president and wealth advisor at Premier Investments in Wealth Management. He is known as the leading candidate for president at Premier Investments in Wealth Management, too, and its election is coming up. The election's done. Congratulations, Mr. President. The big kahuna, Roger Abel.
Are we going to vote on that as a company?
It's done.
That's already been done?
You
okay.
Be quiet.
I'm glad you voted yes.
Did I have?
Did vote
wait,
yes,
hold on. Did I have
Molly,
a vote?
shut off his mic now.
I mean, this is like the Electoral College, where I own 99% of the votes and you own one.
Exactly.
I get half a vote.
I'm California,
goodness.
you're Idaho.
Half of a half.
I don't know, however many votes.
Ranked choice voting. We go there, too.
Yeah.
Oh, my goodness.
Let's not even go there.
No,
but
let's
it's
not.
ironic you brought that up. Literally, before we filmed the show, you guys heard I took a call from a client. What do you think? All my friends are calling me, letting me know that in the next day or two, you know, we're clearly filming this before the election.
Right.
But he called me up and said, hey, what do you think? My friends are calling me. They're watching all these YouTube things and the market's just going to crash. And, you know, maybe it will. But he goes, what do you think we should do? I said, well, you know what we do. We already have your 2 to 3 years of cash built up in your liquid bucket. Mm-hmm. So if the market goes down, big deal. We'll let it come back like it always has. Mm-hmm. You know, he started asking about gold. I'm like, well, gold's up 30%. So I guess, yeah, buy gold. I mean, all it is greed and fear that are driving people into this election. People are using this election to profit from what's going on. And I think it's really imperative right now more than ever that people have a media filter and understand who is giving you the information and where it is coming from. Yeah. And anybody can post anything on YouTube. Guess who's not allowed to just post anything they want on YouTube? Us. We have a compliance department.
Yeah.
They review every one of these shows we put out. They make sure we're not distorting the information. And unfortunately, most of the people putting stuff on YouTube or a podcast, they don't have a regulatory body unless they have some type of a license, and most of them don't.
Yeah, most don't. And just, the client that just called to ask those questions, well, I have friends calling. What do you think the odds are, the friends that are calling and making them, well, the market's going to crash in the next day or two, making that prediction? What do you think the odds are that they've been uninvested for the last couple of years because probably didn't have a plan, didn't have a strategy, got out of the market in 2022 when it got hard to be an investor, and now what are they waiting for? Well, we're waiting for the pullback. Well, when is it going to happen?
That's actually really insightful. They're hoping for a pullback so they get their opportunity to get back in because they've been out for 2 years. And if they just didn't do anything, they'd be lightning years ahead.
And there's no, this doesn't mean this can't change, but all of the technical analysis, just every way you start to, peel back the layers and look at the market, we are in a bull market. There's more stocks that are starting to do better. It's just hard to make an argument for a bear market right now. That doesn't mean things can't change over time. And will we have another bear market? Yes, eventually we will. But these calls for huge market crashes and go buy precious metal, a lot of time there's an underlying motive to all that stuff you're being presented.
Well, here's the thing. Roger said it before. Greed and fear. Those are the two biggest motivators in order to make people. They're trying to work on your presuppositions and your weaknesses, our weaknesses, in order to motivate us to do something that's going to put money in their pocket.
What they're trying to do is, because it's an election, it's not one party or the other party's fearful.
Mm-hmm.
They both are.
Yeah.
And honestly, a lot of it probably doesn't matter, but this is the opportunity because there's a short period of time to take action, which, you should take action, get a financial plan. That's what you should really do. Figure out how to get a distribution strategy before this if you want to plan it away. But people are using this as motivation to go get people to go to their website, to engage with them in a fearful manner. And most of the time, that's not when you make your best decisions.
President Abel, the result of that phone call that you took earlier, it was one of those things where the person had a financial plan, and part of the plan was, you said, they had money set aside, very liquid, in case something happens. And so you were able to talk to them. And what was their feel, your feel of their psyche getting off the phone?
Yeah. He's like, I know you're right. He goes, I just wanted to verify it. See you at lunch tomorrow. I mean, that was you guys were here. It was like 2 minutes. Yeah. He's like, I just don't understand. They're saying do this and do that. I said, well, they can say anything they want. At the end of the day, here's how you take care of the problem. I know how much money you plan on spending the next year. Multiply it by 3, put it in cash, call it good. And if you think about why we do that, the average bear market recovery, so from the time it goes down 20% to the time it comes back, but right around 300 days. So that's 1 year of cash.
Right.
Going back to 1960, the longest bear market recovery is a little over 900 days. That was a great financial crisis, great recession. So if you have 1 to 3 years of cash sitting there, we can weather most storms and not have to sell. And that's how you kill portfolios, is selling when the stock market is down.
Yeah.
We can't control what the stock market's going to do. So all we can control, how much we save, how much we spend, where our assets are located, and what our distribution strategy is if we're retired. If you're not retired and you're an accumulator, I wouldn't even worry about this. The market goes down, that's an opportunity for you. You're buying shares at a lower price. Go back and look over the last 30 years. All the bad stuff that could happen. Apocalypse du jour. Over the last 30 years, all these scary things, right now, all 3 of us in this room would have been happy to put all of our money in at any time over the last 30 years.
And think about all the things we've survived the last 30 years.
Oh, well, that's what people are saying. This time's
Y2K,
different.
great financial crisis, global pandemic, record
Dot-com
inflation,
boom, housing bubble.
the housing bubble,
Yeah.
most aggressive interest rate increase ever.
Insert name of president here. I mean, we survived
Different
all of them.
presidents.
Exactly.
Still standing.
I know. It's amazing.
Think about this. Right now, someone out there is saying, but this time's different.
Yeah.
You're right. Like the cause will be different.
Right.
The likely outcome is going to be the same as it has been for the last 100 years. I mean, would you have bought the stock market the day before? Like bought an index of the stock market the day before the Great Depression?
Yeah.
Yeah, you'd love to buy that. But in the moment.
I wish I could take every dollar I have right now and do that.
I wish I could take every dollar I had and put it back to 2008, the day before, October 2008, right before everything in the world broke loose. But in the moment, which is what we are in now, we are in the moment. That's not how people feel, because they're really concerned about seeing that short-term loss on paper in the unknown. And truth be told, what financial planning does is it removes the fear of the unknown. We're able to stress test these plans for people, Elias, and say, hey, if bad things happen, we have a plan to deal with it. Not just hope and wait for it to come back. We have a plan. We did the same thing in 2022. We ran the portfolio recovery strategy. What are we doing now? We're adding protection to people's portfolio. Doesn't mean you have to be out of the market, but we just find creative ways to add levels of protection.
Premier Investments and Wealth Management Financial Program. Get in touch with them at premieriwm.com. Click Get Started, answer a few questions, and you'll have in your hands at that first meeting with them, which is absolutely free, no obligation, the one-page Premier Vision document. You can make your appointment online also at premieriwm.com, and you can call to make your appointment. The phone number is 800-383-6590. Mr. Vice President, a question for you during this debate. I'm sorry, I couldn't help that. We've got an election coming up. The Tax Cut and Jobs Act of 2017 is something that is on the chopping block mandatorily because it was sunsetted in the original legislation, effective at the end of 2025. There's some debate with regard to how they're going to act to that and react to that. Wanted to get into that a little bit with regard to this, because it's something that the idea behind it was to put more money in the pockets of Americans. And when we hit COVID and everything happened during then, it was something that was substantial. And then the government piled on with even more money for people and for different groups out there. Talk to me a little bit about what you're seeing, not even so much the tea leaves, but the cost of this and maybe the expectations, how it might be worked through in D.C.
Well, I think the best way to prepare for this, I think the expectation should be for most people that income taxes will be going up. I mean, when the legislation was written, it was going to sunset in 2025, right? And then tax year 2026, that's going to be the tax rates we are using. So, we've been preparing for that. So doing strategies to get ahead of that as much as we can. I think that's just what people should expect to happen. The speculation that the bill will get extended or maybe they'll do another version. I mean, at this point, it's all speculation. Mm-hmm. So I think planning for what we know is always more effective instead of trying to plan for something that's really a guess at this point.
Do you ever feel like your financial goals are just out of reach? It's time to take control of your future with Premier Investments and Wealth Management, your partner in financial independence. Imagine a financial plan that's as individual as you are. At Premier Investments and Wealth Management, our team of experienced advisors will work closely with you to create a roadmap tailored to your dreams. We'll help simplify complex financial concepts, provide clear guidance, and empower you to make informed decisions. Financial wellness is within your grasp. Visit www.premieriwm.com to schedule a meeting with an experienced advisor today.
So I think even if we extend some of the Tax Cut and Jobs Act, I think there's going to be parts that are amended. I think even President Trump has come out and said he wants to bring back the SALT tax deduction, which is highly contested. And what that stands for is a state and local tax deduction that's limited to $10,000. Mm-hmm. He's come out and said, hey, I want to eliminate this or increase the cap, because there's a lot of places in America where your property taxes are $10,000, let alone when you pay state tax. So if they just do that one thing, it's modified. But here's kind of the highlighting changes that we know are going to happen. And the things that I think are going to most dramatically impact people. First, the standard deduction, which the vast majority of Americans right now are using the standard deduction, not itemizing their expenses, is getting cut basically in half. It's going to be $6,350 for a single person, $12,700 for a household. So right now it's $14,500 per person.
Yeah.
So you're getting a $30,000 off the top deduction. It's getting cut in half. So a lot more people are going to start itemizing. Some of the positive things with that, I think that might happen. I think people might become a little bit more charitable, as their charitable donations actually are going to have a tax benefit. For a lot of people, if they make charitable donations outside of a QCD, there's not a whole lot of benefit to making a $1,000 charitable donation. You're not getting a tax deduction for it. So that's first. And I think that's the one that most people are going to feel the most. Second, the tax rates are all going up. So the 12% bracket becomes 15, the 22 becomes 25, the 24 becomes 28, the 32 becomes 33. So for those middle brackets, basically 94,000 up to about 650,000, your actual tax rate's going up. Capital gains rates, those are staying the same. The one benefit for people, especially with the cost of rising real estate under the current tax code, mortgage interest is limited to $750,000 of acquisition debt and no home equity line of credit. That's going back to $1 million. So if you borrowed $1 million for your property, you can utilize the interest deduction on all $1 million plus $100,000 of home equity line of credit. And then the big thing, especially for people who have large estates, the estate tax is sunsetting back to $5 million plus adjustment for inflation. So the estate tax is getting cut in half too, the exemption. So it's actually going to put a lot more people into the situation where they might have an estate tax problem.
Something else on the other side of the spectrum is for younger families as well. And I know the presidential candidates have been making hay with regard to this. I'm looking at a CBS News report. Says former President Donald Trump's campaign proposing a $5,000 per child yearly tax credit. He wants to go to all families regardless of income, whereas Vice President Kamala Harris proposing a tax credit of up to $3,600 per child with a bump to $6,000 for newborns, and that's for only low and middle income families. She would even make the credit refundable, meaning even parents who don't pay taxes would get that credit in cash. So if you file and you don't pay any tax, it's just like the earned income tax credit. Whoop, they just send a check back to you. That's a big hit in the federal budget. And so that makes it a little bit more negotiating as far as some of these other things as well. But that's if they can get it through Congress.
Yeah. And here's the issue. Childcare, we have young kids. We understand the cost of childcare.
Right.
And it negatively affects families in a couple of ways. One, you get situations where one spouse stays home decides to stay home because, truth be told, doesn't make sense for them to really go to work. But number two, there's a lot of families who are sacrificing their future retirement dollars to pay for childcare. And whether this is right or wrong, I think if we look at this from a financial planning standpoint and this long-term vision of financial health in America, if we find a way to let people save more money, I think that's a good thing.
Yeah.
What the numbers are, I don't know, but I would venture to guess if you go look at what's the average income in America, $77,000. I think it's $77,000 per household. Let's say it's $77,000. How are you going to drop $1,000 or $1,500 a month for childcare? These families actually need help. So whatever the number is, I don't know.
Right.
But yeah, that is going to change. So there will be some good. There will be some bad with the change in the tax code.
Yeah.
I think people should just, especially people who have large IRA accounts and some of these other things, there's some maneuvers you can do right now to take advantage of the lower tax rates and where they're going to go in the future.
Elias, unless you had something to point out, one thing I wanted to say is that we've got a buddy of mine, Rory, who says, hey, hope for the best, expect the worst. So, you can say, I really would like this to happen, but you have to plan for maybe the worst outcome. And that's one of the things when you have a wealth advisor, you have the ability to sort of work within that milieu. You've got the computer software that can draw up a whole gajillion number of scenarios that give people a little bit better feel of what's going on rather than just a guesstimation. And you can sort of work with it too. Say, okay, what happens if that horrible outcome becomes a little bit more likely? You can take a look at those outcomes too.
We can. And, I think when you're doing that, the other thing that happens is we're going to be using, which we're trying to use the best information possible,
right,
and remove as much emotion as possible, where a lot of times when you start talking about elections and new taxes and extending a tax bill and raising taxes, lowering taxes, it very quickly becomes a very emotional conversation,
right,
for people. So I think the more you can eliminate the emotion from the decision-making process, from your planning process, you can make good decisions, and also understand that without the crystal ball, it's hard to make perfect decisions.
Yeah.
And we don't necessarily need to make perfect decisions, but we do need to make good decisions with the information that is available to us today.
And that information can be available to you in the page of the one-page Premier Vision document by going to premieriwm.com. Click Get Started, answer a couple of questions. They hold that information in confidence. They'll produce for you that one-page idea. It's sort of like a one-page map, a one-page My Financial Confidence report that's yours for free, just for sitting down with a no-obligation consultation with them. And it's very graphically oriented, but the nice thing about it too, Roger Abel, is that it is something that has goals on it and it has action steps on it so that people can see, I see where I am here, I see what the next action step is and what the goal is. And really, that's something that you talked about, is making sure people have a tangible goal. You talk about it. If you get really into the weeds on this, what is my financial independence date? You said that this will be the third show in a row that we've talked about my financial independence date. Those are critical things that people just don't have enough of in their life.
Yeah, and I think what I think about that, the one-page plan, it's almost like your personal little scorecard. Hey, these are the things I was supposed to do. Did I do them? I was on track. Now I'm on track. We have to have a way to keep score. Like, if you're not keeping score, how do you know if you get to the end and win? And that's a little bit of the way to keep score. Am I on track? Am I doing all the nice things that I need to do? Right. And it's so simple. A person once told me, if you don't write your goal down, it's not real. That's really what you're doing with your one-page plan, is you're creating goals and priorities and then trying to accomplish them.
You know what? When it comes down to it, we're talking about the Tax Cuts and Jobs Act from 2017. And whether it's going to get re-upped in this next Congress, because it's supposed to expire in 2025 for the 2026 tax year. There are going to be some significant obstacles, Elias, for that to happen, because you take a look at the entitlement spending, the Social Security, Medicaid, all of that, and the amount that's in there, and the fact that they say it's the mid-2030s, that if they don't do something about it, then it will go, quote, insolvent. Now, there's different things that Washington can do to move the numbers around, but ultimately there's a pay the piper concept here, one way or the other. And a lot of people are saying, maybe we should just be prepared for taxes to go up no matter what, just to make sure we're ready to defend against that.
Well, unless there's other legislation, the taxes are going to go up, right? And when you talk about programs like Social Security, and you can probably there probably is an argument out there that maybe taxes should go back to what they were previously. I don't want to pay any more taxes. No one does, right? But even just lowering the standard deduction, well, that's going to increase taxes just by doing that, regardless of what the brackets actually are. And, we all know we have a large national deficit, and the government, how do they raise their revenue? They raise their revenue through tax increases. So if we have this large deficit, they need more money. It's kind of hard to say. It's just hard to predict what will happen.
Yeah.
And their spending, I mean, is our government ever going to be good spenders and like efficient spenders and be responsible with all the dollars? Does anyone foresee that part of this changing? Probably not.
Not unless they're forced to.
Right.
I mean, the only way to really force them to do that is to stop buying the U.S. debt.
Or vote them out of office. I mean, that's another one.
But you're assuming the next group is going to change too. And I just, I don't, the spending problem won't be solved until somebody says, look, we're not buying your debt. That's the only way we keep it going. There's going to be some pain along with that at some point.
El Presidente, Roger Abel. Let's get a forecast, shall we?
I don't forecast.
Okay. Well, the whole thing is that, I mean,
what do you want the forecast to be?
Because we're coming up to an election point.
Okay.
I'm not looking for pick the winner or loser in the election, but you look at things like, it was here recently that Boeing's made a deal with their people, so they're going to be getting back to work on a regular basis. Some of those strikes are going to be over. We're moving in. What are the policies for you and your company that you talk about internally to say, hey, how do we work with our clients in order to make sure that no matter whether it's election day 2024, 2026, 28, whatever election day, they're well prepared?
We plan. We wouldn't base any investment philosophy around one sole policy because then you're in the prediction business. Mm-hmm. We can look around at people who've been in the prediction business for the better part of a decade. I can start naming people, and they've been wrong.
Right.
Truth be told, history likely repeats itself at some level. I believe the U.S. economy will do fine. And truth be told, if you believe the stock market's going down, you believe U.S. companies are getting worse at making money. I don't believe that's the case. That said, how do we deal with all these other things that are going to come? You have a well-written financial plan. If you're taking money, you have a well-crafted distribution plan to handle any of the anomalies or what we would call black swan events that are out there.
Right.
I mean, let's be honest. If everybody knew the market was going down, then they prepared. That's not what happens. Did anybody see COVID coming? Oh, no. That's a black swan event. A few people saw the great financial crisis, right? Like a few people saw the housing market problem that was going to come. I don't think they maybe knew how bad it was, but only a few. There's going to be another event just like it. But the way you handle it is by making sure you know where your money's coming from, what its goal and responsibility is, and then executing the strategy and tuning out the rest of the noise. I mean, if you live in the world of what you can control, your life gets a lot better. I have a friend of mine, professional athlete. He told me, he goes, my life was a lot better when I stopped worrying about what people thought. It's the same thing. When you stop worrying about what you can't control, life is just a lot better.
Exactly.
Here's what you can control: how much you spend, how much you save, what your asset allocation is, how much planning you've done. That's all you can control. Everything else. Yeah, in your mindset. Yeah. I mean, if I were people right now, I'd be figuring out how do I have a media filter and tune out the noise. Seriously, tune it out. Do some planning, not worry about what I hear on the radio the next 60 to 90 days. Because even when the election's done, it's not going to be over.
No, it's not. It'll continue.
It's going to continue until January 6th.
Do yourself, and hopefully not beyond, do yourself a favor. Get over to premieriwm.com. Punch Get Started. Make sure you fill that out and get your appointment for that Premier Vision document. Again, premieriwm.com. 800-383-6590. Hopefully you've educated yourself and have voted by Election Day. If you've not already, make sure you get that done. For Roger Abel and Elias Randall, I'm Doug Wagner. Thanks for joining us.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Premier Investments and Wealth Management and LPL Financial do not provide tax advice. Please consult your tax professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal.